Welcome to the Clear to Close podcast. For those who don't know me, I'm Josh Thomson. I'm the CEO of TechneTitle. We wanted to start this podcast to let people know about title insurance, and the real estate industry. We're a title company in Southwest Ohio, located in Cincinnati, and we're excited to start this podcast to share industry insights and hopefully provide value to you, the listener. I have a co-host with me, Trey. Go ahead and introduce yourself.
Well, I'm Trey Barrowman. I am an attorney here with TechneTitle. I'm a licensed title agent with TechneTitle, licensed in Ohio and Kentucky on both of those. A little bit of background about me is I grew up in the area. I grew up in northern Kentucky, but my family's all from Claremont County, which is where we're sitting right now. My grandfather was a bailiff for a domestic court judge, and I remember someone asked me, "What do you want to do?" And I said, "I either want to be the Cincinnati Reds center fielder, or I want to be the president of the United States." Right? And the center fielder didn't work out; it didn't hit well enough, and so I don't know that I want to be the president of the United States, because honestly, I found that I like working with people, not trying to tell people what to do. So I went to undergrad in Louisiana. I went to law school at Northern Kentucky University's Chase College of Law, which is kind of sitting behind me, about 20 miles away. And people always ask, what type of law do you want to practice? Mm-hmm. And I told them, I said, I can't tell you what I want to practice. I can tell you what I don't want to practice, which is I don't want to practice domestic relations law, because it's a tough road. You're more their therapist than you are their attorney, and at the end of the day, you're working with their most prized asset, their kids, right, a lot of times. Mm-hmm. And then I didn't want to do criminal law, just because I don't like being in court. And frankly, we do all of our transactions so that someone's never in court, right? I like to be in the trenches, though, with people. I like to, help my neighbors, right? And then I'm also a residential real estate specialist through the Ohio State Bar Association, one of 9 of those in the state, and only 3 in south of Franklin County, south of Columbus, Ohio. Yeah. And I've been with TechneTitle about 10 years.
Yeah.
About 3 days, I'll be at 10 years.
There you go. So Trey has a lot of experience in this industry. I'm a relative newcomer. I would say very newcomer, actually. I started here in March, taking over for my dad. And like I said, part of what we want to do here is provide value to the industry, explain kind of the why behind what we do, provide insights, talking through our partners, lenders, and realtors, and give back to the community in that way. So I'm excited to pick your brain and do this with you, and provide that value to people.
Yeah, that's awesome. I want people to learn what they want to learn, and what they need to learn sometimes.
For sure. Awesome. Well, Trey, I'm excited and look forward to the coming episodes.
Sounds great.
Thank you for watching the Clear to Close podcast. Please remember to like, subscribe, and comment. Thanks. All right, Trey. Well, today we are getting into a topic that was a major question in my mind as I joined this industry, and is foundational to obviously the industry and to real estate as a whole. And it's, what is title and what is title insurance?
Sure.
So I'm excited to get into this one with you. So first, can you just explain, what is title in the context of real estate?
You didn't learn that in high school?
That was not in the in the curriculum.
That was in everyone's curriculum, I thought. Title is ownership to real estate. It's what people think when they say, I want to be on the deed. Right. I get so many calls from people that's like, I want to put my kids on the deed. Mm-hmm. Right. It's just a legal way of identifying the owner of the property. Our modern real estate dates back. I don't want to give you guys too much of a history lesson, but it dates back to the Magna Carta, which was signed in 1215 in England, and it was a way to really keep the government from overburdening the subjects, right? And it was a way to say the government is not above the law. The government enforces the law for the people, right? It comes from a feudal system where fiefdoms and all this fun stuff, right? That you probably learned about in high school history class. I think that was on the curriculum, most people's curriculum, and you probably know it a little bit. But at the end of the day, it influenced the U.S. Constitution hugely because, again, more history. The U.S. Constitution was built from people that felt like they were subjected to things that they didn't agree with.
Unfair practices.
Absolutely.
In Europe, right? Yeah.
Absolutely. And don't get me wrong, there were good things about what was going on in England at the time, but there were a lot of bad things too, right? And they wanted something different. So land ownership comes from that. It comes from the agrarian society that we were. We weren't hunter-gatherers, but remember the Industrial Revolution hadn't occurred yet, right? The Industrial Revolution didn't happen until a little bit before the Civil War, and our country was founded before that.
Yep.
And then you've got land ownership, you've got colonial expansion, which was all about owning land. That's where you really got your value, got your assets, got your net worth. That's how you provided for your family. I mean, it was farming a lot back then. So we've adjusted away from that. But the way that real estate is handled hasn't necessarily. And so from that, having clear ownership to your property is huge.
Yeah.
Right?
Right. So the other term I heard, is like, oh, it's a clear title.
Right.
What does that mean?
So there's a couple of different terms. Clear title would be probably what people would consider marketable title. Marketable title is not necessarily something that has no defects to it because, heck, taxes are always owed, right? In Ohio, they're paid in arrears. So when you're paying your taxes, you're actually paying for last year's taxes, right? There are going to be, if your road goes to the center line of if your house goes to the center line of a road, your property lines, you're going to have the roadway that goes over it, right? To the, half of the roadway probably. And so it's not necessarily free of any claims, but it's free from claims that a reasonable person would say, yeah, that's fine. That makes sense, right? Utility lines, right? It's kind of hard to get a sewer to your property if you're not allowed to run a utility line back to your house, right? So that's what it is. It's marketable title, which is what basically a court, if a buyer said, oh, no, this is on the title, I'm not buying it. A court, seller brings you to court and says, you agreed to buy it. You're going to buy it. And the court would say, this is clear. You need to buy it. And if you don't, we'll force you to.
So, clear. So clear means there's no major claims to the property that are unaddressed.
Correct. That a reasonable person would not object to.
Got it.
Yeah.
Yep. Makes sense. And that took me a little bit to fully understand that start in the industry and all the ways that there can be claims against the property. So what are some of the major issues that we see on, I guess the other term is clouded title?
Sure. So you're going to have insurable and uninsurable title, which is kind of a step down from marketable title. It does not mean that you have marketable title. What it means is we found out the possible issues, and the likelihood of a claim is so insignificant that we're willing to take a risk on it. Because if we didn't take any risks ever, title insurance really would be worthless, right?
Yeah.
There's going to be something out there. I don't know that many titles are completely clear, right?
Yep.
But there's going to be something we're going to say, man, a dower interest from 40 years ago. What is the likelihood? We research. Are they still alive? Do we need to file something in the records? But at the end of the day, we might say no reasonable person is ever going to make a claim on this.
Yeah.
And so we're willing to insure it.
So let's talk about, I guess, the process of how we get to that point. So, home people who are buying or selling, their property, you go into contract. Your real estate agent may recommend a title company such as ourselves, or if you've done your own research and know who you want to go with as the buyer, you can. And this is in Ohio. You put that on the contract, and the order ends up in our inbox, and we start to do a title search on it. So that's the first step in our process. That is where we're going and looking back to find these issues. So I guess explain that. I guess briefly explain. We don't need to go into the nitty gritty of that process, but what are we looking for as we go do that search?
Absolutely. So first, we're going to look and see if it's a refinance or purchase, right? Because if it's a refinance, there's a shorter process because, frankly, in my personal opinion, the bank's going to get paid unless there's a bankruptcy or foreclosure. It is an easier process most of the time, I would say, because there's just so much more that an owner cares about that a bank cares about, right? So the standards allow us to go a shorter process, basically make sure that everything is addressed that's been recent. But if for a marketable title search is what we do for a purchase on property, because the Marketable Title Act in Ohio requires you to go back at least 40 years. Doesn't mean just 40. It means at least 40 to basically the next sale beyond 40 years. And then you run it back forward, and you run all the public records. In Ohio, we're talking auditor, recorder, clerk of courts, for common pleas courts, municipal court occasionally, some bankruptcy searches, domestic relations, probate, all of those. We're running all of those. So everyone thinks that you're just running the deeds back. And you are.
Yeah,
that's part of it.
Yep.
But if you think about it, I mean, I think earlier we talked about we're part of an agrarian society, and all your wealth historically was tied up in real estate. So a lot attaches to your real estate. If you don't pay your creditors, they knew that was the best way to get back their money, right? And so historically, people didn't take out a lot of mortgages. They might sit with their 15-year mortgage, 30-year mortgages in some cases hadn't even been invented yet. They might sit with one mortgage for the life of their entire ownership in the property. And then we're talking owning it 30 years.
Yeah.
Now the average person buys and sells somewhere between 5 and 10 years. Very rarely do they own the same property beyond 10 years. So we're going to do that. We're going to issue a title commitment, which is just us promising that here's who owns it. Here's what we need to have done to issue you this title insurance policy. And then all the exceptions on, the taxes, any current outstanding mortgages, which we need to pay off, any monetary liens against the parties, they didn't pay their credit card bill, they got a child support lien, those types of things. We need those cleared. If there's an estate, that adds additional stuff. If there's foreclosures in the chain, that's additional stuff, those types of things. And then we follow that kind of as a roadmap to the closing. I do think it's important for buyers to look and read their title commitment, because if there's an HOA or if it has restrictions on the property, it'll be reported there. You may not have the document in front of you that has the restrictions, but you'll know where they are. And you can, of course, ask us for a copy. I'm sure we would provide it. But you can also say, all right, I need to go to the recorder's office, and all I have to do is type in this book and page, and I can pull it up, and I can see exactly what's on there, right? Those types of things.
Yeah. So it's a great point. Next step is a title commitment. So we're committing to ensure the title, and like you say, given certain things are done. And the reason we're not, be able to issue insurance right there is a lot of those things are paid off in the settlement statement at the closing table. Is that accurate?
Yeah, the commitment informs the closing statement where all the money's handled, right? That shows a breakdown of where every dollar in and every dollar out goes.
Yep.
Right? And then, of course, you have to have the closing. You have to sign your deed. You have to sign your mortgage. You have to sign a bunch of additional documents, which, one day maybe we'll get into an electronic format.
Yeah.
But you have to do that process because at the end of the day, that is a very important thing. And in our area, we do a lot of roundtable closings, at least in residential real estate.
Yep.
And roundtable meaning the buyer and the seller, for the most part, get together at a table. They sign all their documents in front of the closer, who's always a notary. And then the title company takes it, records the deed, records the mortgage, updates the title to make sure you didn't, refinance it right before you went and sold it, right? Those types of things. And then at that point, once the deed's recorded, once the mortgage is recorded, then you can issue the final title insurance policy. And that title insurance policy lasts as long as you own the property, and it sometimes goes beyond your ownership of the property as long as you have any liability to your next buyer.
Right. So that kind of leads into our next thing. So, we talked about title, how we ensure that as you're either buying or selling, it's going to transfer through that closing process. So now we issue the title insurance. So what is title insurance? How does it differ from homeowners insurance, car insurance, anything else that we're typically familiar with when we say the word insurance?
Yeah. So you can break all those other ones down into let's just call it property and casualty.
Okay.
Right? They are insuring against something that's maybe going to happen in the future. If it's car insurance, it's probably going to happen in the future. If it's health insurance, it's definitely going to happen in the future.
Mm-hmm.
But if it's title insurance, you're insuring against things that have already happened, but people have not found out about, right? Whether it's not because it's not in the public records, whether it's because it's a forgery, a fraud, something like that back in the chain. You're insuring about things that have already happened that won't come to light until after you own the property.
Right. I mean, so the questions I've heard and I've had in my own mind is like, okay, you did the 40-year search. What do I need title insurance for? You looked at it, right? Shouldn't it be clear?
Yeah.
So maybe just give, if you can, like an example of like something that would be insurable, but we didn't find because maybe it wasn't in the record or there's an error in the record.
Yeah. So it's actually is a perfect case for why when title insurance was created. There was a case in 1854 or something like that where called Watson versus Muirhead. And you can look it up if you really want to.
No thanks.
But basically the conveyancer, they called him back then, had done a title exam on the property. We didn't have a marketable title back then, but he done a title exam on the property, found everything he felt he needed to find, transfers the property. Later it comes back that there was an interest that had not been addressed. The court investigated, they presented all their evidence, did everything that you do in a court case, and said he exercised reasonable care. Mm-hmm. He was not negligent in doing that. There was just something out there that was not able to be found, but was a valid claim. Mm-hmm. So the buyer had no recourse against the conveyancer, the title company, let's call it back then. So what's he going to do? Sure, he can sue the seller, right? If the seller gave him a warranty deed, meaning I'm going to basically defend you if a title claim comes up in the future. But most of the time, those sellers are hard to find. They might be dead. They might have no money.
Yeah.
They might have just blown everything that they got from that closing if they had anything, right? So title insurance was born as a way to indemnify, to really get in the boat with you and say we've both got a vested interest in this. And title insurance companies, the ones that we're underwriters, agents for, the underwriters, they're Fortune 500, Fortune 1000 companies. So even if the title company that did the closing goes out of business the next day, you still have a title policy that is insured by a company that, if it's going out of business, we got big problems in the entire economy.
Yeah, makes sense. And can you just explain, like, what is when we say someone had an interest? What does that mean?
So outstanding ownership claims are some of the bigger ones.
Yeah.
So dower, which again dates back to the Magna Carta, which I told you about earlier. It was a way when women weren't allowed to hold title to real estate, and it was a way to protect them from the husband gambling away the farm.
Yeah.
Right? And so it was a way to say, if your spouse dies, you get to stay in the property. And of course, that leads into mortgages and deeds and everything like that, because if you can gamble away the farm, you can certainly sell it. You can certainly mortgage it.
Yeah.
But only 3 states really have it these days. Ohio and Kentucky, where we operate, and I believe Arkansas is the third one. Some of them have a spousal interest statute or something like that on the marital home. But for the most part, we are unique where we are in that we have this dower interest. And it's not going away.
Yeah.
There's been a lot of people trying to get rid of it.
And then the other would be like either unnamed heirs, issues like with estates and things like that, where somebody may have maybe a fifth. There's 5 children, only 4 signed, so there's a fifth interest out there that's unaddressed when it was sold, and we may not have any of that in the public record, but they were an heir to an estate or something like that. Sure. Is that accurate?
Absolutely. And you've got historical things that have happened. I mean, we've got wars. People are going across overseas to fight wars. They're there for a long time, and things happen. And there have been people that have shown up saying, he's my father.
Yeah.
From, when he was in this war. Not necessarily the greatest story, but if those people don't have title insurance and they have a valid claim, they got to figure out a way to clear that.
Yeah.
And title insurance protects against those things.
Yeah.
Right? Unknown heirs. Invalid powers of attorney are a big one. People thinking they can do something that they can't. I know you came to me the other day with someone who showed up at the closing with a power of attorney, and their dad died that weekend.
Yep.
And they thought they could use that power of attorney.
And sell the property. And,
yeah. I mean, if they hadn't told you that he had died,
yeah, they would have signed with the inbound.
Probably would have found out eventually.
Right.
But not before the money changed hands.
Right.
Right. Unpermitted transfers by a fiduciary. So a fiduciary is like if you're a trustee of a trust, or if you're an executor of an estate,
right,
or something like that. That's what a fiduciary is in our context. Liens and mortgages, big ones, especially during the housing downturn, the housing crash in 2008, the recession. People did these things called HAMP modifications, Home Affordable Modification Program. It was a federal program where basically they couldn't make their payments. So the federal government said, we will pay these lenders to reduce the amount that you have to pay. But what they did is they filed second mortgages on your property. There were no payments necessary until you sold or refinanced. One of two things happened. You sold the property and the mortgage was properly recorded, and then you got the wonderful call that said, you remember where you thought you had one mortgage on the property and this is what you owed? If you think back really far, did you sign something when you couldn't make your payments?
Yeah.
You know, and then you have a second
mortgage that needs paid off.
Yeah, exactly. But the even worse thing that happened is the federal government, when they recorded these, they didn't do it properly. And so those mortgages are not what's called indexed. So you can imagine the amount of transfers that happen in real estate, right? When a title examiner examines title, they don't look at every page of every deed that was recorded. They look at an index, grantor, grantee, right? You're the owner of the property.
Yep.
Did they grant something? And then they go and look at that document and see if it relates to it. Well, they didn't put the names of the owners of the property on the mortgage. And so there was no way to tell. They only put the lender's name. And then errors in transfer documents is a big one. Fraud, forgery, of course.
Sure.
Whether that be with ill intent or without ill intent. Incapacity. So if someone says they're 18 but they're not, they inherited the property and they say they're 18 and they're not. If they have Alzheimer's and maybe advanced stage, something like that, and it's not caught, maybe sometimes they appear fairly competent.
Right.
People are drunk at closings. Have had that happen. Someone showed up drunk at a closing. They said he was a functional alcoholic. I told him, you functionally need to go to Cracker Barrel back, in the days when they didn't serve alcohol.
Yeah.
And sit there for several hours and sober up.
Yeah.
Incomplete foreclosures, bankruptcies.
Yeah.
Those all inform things.
Yeah.
Like that.
Yeah. So, I mean, like I said, I've learned a lot since starting here of these issues that can come up when it seems like, well, this should be straightforward. You did a title search, right? But there are a lot of things that happen and can happen that aren't in the public record that could come out later.
Correct. That
title insurance is protecting you from. So, so you mentioned title insurance is protecting you with things that happened in the past. Is there anything? Are there different types of title insurance, and if there are, like, what are they and how do they kind of differ? Yeah,
there's multiple types. For our purposes, there's really only three to really address. One is the lender's policy. So when you get a loan on a property, your lender wants some assurance that you actually own it, right? I mean, because if you don't own it, what good is the mortgage that you signed? Because if you don't pay your payments, they need to take it as collateral in a foreclosure process. So the loan policy is actually a policy that only protects the lender for if there is a monetary loss if it goes really to bankruptcy or foreclosure. It really does not get enforced outside of that too much, because if they're getting paid, they don't care, right? If you're getting paid, everything's good. But if they don't get paid, then they need some assurance that if something was wrong in that, we need to be able to recoup our money, right? The owner's policy, what we call the basic owner's title insurance policy, which is, I would say, the standard. That's when you think of an owner's policy, this is what you think.
Sure.
That protects the buyer of the property against defects in title to the real estate that happened prior to closing, prior to the actual transaction, that will be discovered in the future. And the goal is, like with any insurance, you hope you never need it, but it's there if you do, right? And then you have one more policy, which is been pretty obscure over the years because it's more expensive, and it requires additional underwriting, which is the technical title is TechneTitle is a homeowner's policy of title insurance, and each underwriter calls it something fancy, but at the end of the day, it's called a homeowner's policy of title insurance, and that actually does provide some insurance against things that happen in the future. People encroaching on your property, building fences, gazebos, whatever, on your property, post-policy forgeries. Someone forges your deed and tries to transfer it out of your name.
Which we have, other episodes that we
and
delve
we'll
deeper into that. But
so watch those
protect
episodes.
You, but that advanced policy would protect you against those things.
And it has certain terms and conditions and all that. But
after you get your title insurance, what happens if an issue is discovered and comes up in the future? How does the policy help protect you?
Sure. So the goal is that you never use it.
Sure.
Right? That's everyone's goal. But what if you do? And I have had plenty of calls with people, and frankly, usually we didn't close it. They called me because they were referred. They bought it 6 years ago or something like that. One of the recent ones I had was someone called me. It was actually a realtor that called me, and they were listing this person's house. And they said, the picture doesn't look right. The picture doesn't look right on the auditor's site. What's going on? Turns out, when the developer created the subdivision, every unit in this condominium was placed a certain way, south to north, 1, 2, 3, 4, right? But on one building, they switched it, and they went north to south. And then they kept the numbers on the front of your door in that same vein. And so it turns out they had owned the wrong condo unit in that building for 30 years.
Wow.
And no one had ever caught it. And I believe, fortunately, in that one, they had title insurance. They were able to make a claim if they needed to. Believe it or not, we didn't have to. We did some work that we didn't really have to do.
Yeah.
But just to help people. And we were able to get them switched. It was a pretty serendipitous thing. Don't expect that to always be the case, but both parties were planning on selling, so they did kind of a switcheroo on it. I had another one where there was a survivorship deed. You hold title and survivorship usually with your spouse, and then that means if one of you passes away, the property transfers the other. But what they didn't bank on is that they had filed for a divorce. And they had gotten a divorce, and then they had gotten back married, which is cool and all, right? That's exciting that they were able to, bring it back, reconcile, and all that. But what happens when you get a divorce is that survivorship cancels, and so they had gotten remarried, all that fun stuff, and they didn't think, does that maybe affect my property?
Yeah.
Then they sell the property. The person dies before they sold it. So just one of the spouses was selling the property. And the buyer buys the property. The title company that had closed it at that time saw the survivorship, and they went on about it. Well, they had gotten divorced in a different state, so it didn't even show up in the public records that they had gotten a divorce. But we found it.
Yeah.
And the buyer, who was now selling at this time, was kind of up a creek without a paddle.
So we're 2 transactions later, and now we're going back and saying, they
Seller
actually
won.
didn't have the authority to
Seller
sell.
1 only had half the property.
Yeah.
Her kids had the rest.
Had the other half, yeah.
And she had a little bit of that extra half, but her kids had that half. And file a title claim, right? You file a title claim because she's, I think, dead at this point, if I remember correctly. And because it had been like 8 years or something like that. And she was older when she conveyed. And so she's dead. The kids, they can't be found. No one can find them. And so they filed a title claim. And there's a process for the title claim, how you file it, when they receive notice, they investigate, and if there's a valid claim, they work to get it resolved or to pay you for your loss.
So this is 8 years later, and you're still covered under the the policy.
Absolutely.
And how did that end up? Did the title insurance company help resolve it? How does that process
So
go
the
forward?
way it worked is I believe in this one, they ended up filing a quiet title, which is just a lawsuit to quiet claims against title, right, to get rid of them. And it was a long process. Don't get me wrong. Court actions are never fun. The goal is not to go to court with this. Find them, settle it, pay them out, whatever you need to do. But sometimes you have to do that. And she was really kind of happy, right, that it was taken care of. And she paid for a title insurance policy at the closing that, not the one we did, but and we were able to do that closing. Took us a little time, but we were able to do that closing and get them through. And then last one I'll probably share right now is a dower interest, missing spousal interest.
Yeah.
Last week I had a title exam with 4 missing spousal interests. That's rare to have 4, but we had 4. And fortunately, the seller from their title insurance on the prior transaction, I don't know how they missed this, but it doesn't matter. It covers errors by the title company too, right?
Yep.
They were able to close on it because they had a title policy with an underwriter. We get insurance, we get indemnity from them, basically saying if this comes up in a future transaction that you've insured, we'll insure it. And they were able to close on it, not lose their seller, get a title insurance policy that covered those missing interests, because it was probably rare that even if that interest exists for sure, we weren't sure because it didn't even say whether they were married or not.
Yeah.
But they were able to get that closing done. And it was fortunate too, because the seller has another house they're ready to purchase. If they lose that, they potentially get sued by the seller on that transaction for not going through with the transaction. But they didn't have the money to go through with both, to not do this one and to do that one.
And to close on the other one. Yeah.
Right. And so it's not always exactly the same story.
Yeah.
There's a lot of different things that go into this. But at the end of the day, because I do a lot of residential real estate.
Yep.
I mean, do some commercial too. These are people's homes, right? They live there. It's not just a place you make money. It's not just a place where you do X, Y, or Z. You know, you go there 9 to 5. It's where you raise your kids, right? And it's really important to people.
Yeah. I mean, once again, this is part of the reason I wanted to do this podcast, is to share these stories, share these experiences. People understand, if that happens to you, you want people on your side that are experts. The underwriters we work with have years of experience. We have, years of experience inside the company here that are working with underwriters to clear any of these issues and understand them. But if they do come up in the future, to work with you to correct them, to have those experts on your side is something very important that you want to have secured moving forward.
And at the end of the day, the cost is significantly less than the cost if you need to use it and you don't have the title insurance.
Right.
Significantly. The average title claim for a fraud or forgery, based on an ALTA, American Land Title Association, which is our overarching entity, was the average title claim for fraud or forgery is $143,000. The average one, right? And then for other things, the average claim is about $27,000. I mean, if you have a check to stroke to write that off and just go on about your day, maybe you don't want title insurance, right? That's fair. But if you pay X to get a policy that protects you from $147,000, might be worth it.
Yeah, makes sense. And yeah, these are things. I mean, I continue to learn every day. But I mean, things that you hope never happen, like we said with all insurance. But if they do, you want to have that expert team on your side that's going to help you navigate and clear those issues. So, any final thoughts or things that you think people should know about, like just title in general or title insurance?
So as a new home buyer, if you're buying your first house, be curious.
Yeah.
Right? Get the coverage that you value. I mean, if you're buying with a mortgage, you're going to have to get a loan policy almost certainly. That's the way the game goes. But be curious about whether, because the owner's policy in Ohio and Kentucky is optional. You don't have to get it. But do you really want to not get it? And everyone tends to think, well, the cost is so high, right? But if you think about it, it is less than the average loan origination fee, and it is significantly less than the average real estate commission, which of course is usually paid for by the seller, subject to some changes in the industry.
Sure.
But it's averages about 0.5% of the home sales price. Average loan origination fee is between 0.5% and 1%, and the average real estate commission is 6% of the home sales price. So of the professionals that you employ in a real estate transaction, it is the cheapest, and it has the potential for the most long-lasting effects.
Yeah, makes sense. I mean, protecting yourself for as long as you own the property for something that is a one-time cost is very different than other insurance products. And once again, something that I learned as I dove into this.
And with the caveat that I sell title insurance.
Sure.
Like,
this is what we do. We believe in the product, right?
In one, I have a vested interest in having it sold. Otherwise, I'm not putting food on the table for my kids, right? But on the other hand, I wouldn't sell it if I didn't think that it was valuable, right? It's just not the type of person I was raised to be.
Yeah.
And then two, remember, rarely is a title completely clean. I'd say without the transactions that have zero title issues, might be 50% of, just anecdotally, might be 50% of the title exams that I review. And I review pretty much everyone that comes through this office. Right? I mean, I've reviewed thousands over 10 years. Right? And then just investigate. Don't be a victim if you're a buyer. Take control of your own destiny to some extent where you can. Sometimes that's by spending money. Sometimes that's by doing research. We have a world where people want others to do things for them, and we're happy to do that for us. But figure out if it's something you really want, because we don't want to make the decision for you whether you want it. We want to inform you so that you can make that decision.
Absolutely. And, I think that's why we wanted to do this episode. People in the industry hopefully are familiar with a lot of these topics, but if you're a home buyer, first-time home buyer, and you're interested, hopefully you're finding this content and it's helpful to you. So thanks, Trey. Thanks for walking us through that.
Absolutely. It's fun, and I enjoy it way too much probably, but I'm a little bit of a nerd, and I really do enjoy it.
Thank you for watching the Clear to Close podcast. Please remember to like, subscribe, and comment. Thanks.
All information provided in this publication is for informational and educational purposes only, and in no way is any of this content contained herein to be construed as financial, investment, or legal advice or instruction. TechneTitle Agency, Inc. and the guests appearing on this podcast do not guarantee the quality, accuracy, completeness, or timelines of the information in this publication. While efforts are made to verify the information provided, the information should not be assumed to be error-free. Some information in this publication may have been provided by third parties and has not necessarily been verified by TechneTitle Agency, Inc. TechneTitle Agency, Inc., its affiliates, and subsidiaries do not assume any liability for the information contained herein, be it direct, indirect, consequential, special, or exemplary, or other damages whatsoever, however caused, arising out of or in connection with the use of this publication or in reliance on the information, including any personal or pecuniary loss, whether the action is contract, tort, including negligence, or other tortious action.